All right, I think this should be working out. This is June 24th, 2024 live stream. We have 7 minutes left to the open. And like I said, in my so going back to what I have for coming into this week, I told myself that previous week's low was going to be the draw of liquidity. Previous week's low was going to be the draw on NQ, and ES isn't even nowhere near where its draw of liquidity is too. So yeah, we're gonna see where the 930 takes us, but we might have that higher time frame SMT as of right now, but we'll see. So after that, after we take previous week's low, I would only be considering trading like I would only consider trading lower time frame models, just because the higher time frame we already retraced back inside that weekly FEG, which was the higher time frame objective, and now if we can get displacement away from the FEG, then I'll consider looking for anything higher time frame. But as of right now, I'll only be trading lower time frame models, just to be safe. But we have about 35 minutes left till I can actually start trading. I can only trade at the after 10 a.m. opening bell. So we'll see where prices takes us here. But yeah, I would stay away from this first 30 minutes since it's also Monday as well. So prices might be a little bit out of sync with each other. NQ, ES, and YM. I do have non-copyrighted music playing. It's a non-copyrighted playlist, so I should be okay. But if I get copyrighted, then I don't know what to say. And yeah, so we just retrace back inside that weekly FEG. So we'll see if we can get some displacement away on it, away from the FEG on the daily time frame, some sort. But as of right now, only trading lower time frame models. We have 2 minutes left to the open, and we don't have any news today, so don't have too much expectations for today. Yeah, so objective was to take out previous week. Oh, this occurred. They took it out during the pre-market session, so not much to anticipate here. Do want to see how this 4 hour candle closes though, so there is the open. And let's see how out of sync prices are. Like I said, it is a Monday morning. Usually every morning at 9:30 a.m. EST, prices are out of sync with spiral. Not spiral, but for that first 30 minutes, they could be a little bit out of sync, a little bit volatile. Let's see what the opening range gap is. Okay, so there's the gap. Should have a quite a decently large size here. Yeah, about 80 pips, or 80 points. Should stay on the higher time frame or on the 15-minute time frame. No need to go on the 1 minute as of right now. You just keep it. Keep watching. We had a little bit of market structure shift here on the hourly time frame. Market structure shift. We retrace back inside an FEG and we display continue lower. Midnight open. There's midnight open. On my free time, sometimes I do like I do like looking at the my previous trades just to see how I done. Bro, what is this? Why? Alright, so we are getting some, displacement back inside this range here. I shouldn't say displacement, but we are trading higher back inside this range. No setups. Let me see the enter. Sure. So, like I said, we're gonna wait to see how this hourly closes and see if there's any FEGs or anything like that. But we'll wait till the hourly closure here. It is also the 4-hour closure too, so yeah, just keep that in mind. Interesting way to start. Let's mark out previous. This is London session highs here. London highs. And this would be marked out as pre-market highs. Pre-market high. We're creating kind of a wiki 15-minute candle, but like I said, we're not going to trade that first 30 minutes. First 30 minutes of the open. With the rules over. So, following my third rule as of right now, you don't want to trade the last 30 minutes of a 4-hour candle, and this is the last 30 minutes of this 6 a.m. 4-hour candle. So we're gonna wait and see. Okay. no need to push any buttons here right now. Still got 20 minutes till to open. Ooh, let's play some Wordle, shall we? Let's get a Wordle. Keep my mind going. Audio. Start off. There is a D and a O. So D, E, N, O. Menos. Minot. Halos. Okay, so L is in there. Now there's a D, L. It could be D-O-L. So D-O-L. Dolly? Oh, on the third try. That's what I'm talking about. Muse. Delicate. Bare. Raw. Bare, raw, new. Delicate, sensitive, tender. Starter. Main starter. Delicate, sensitive, tender. New? Is new would be one? No. Wait, delicate, sensitive, tender, bare. New. Taste. Carp. Oh, wait. This could be a starter, main, dessert, inside. Some restaurant courses, yeah. Tender. Delicious. How can you delicate? No, but delicate, tender. delicate, sensitive deer. Tape carpet, deer, raw, muse. I want to search for muses. So muse is a food. What muse? Tender, sensitive, delicate. Tender, sensitive, delicate. I said you don't want to be trading these first 30 minutes. This price is wonky. What is that? Oh, nice. Sort of touch. Okay, so new tape carpet. Muse. Why would muse be on here? Deer. Tape. What could tape mean? Tape could be either the actual sticking thing or the video. Carpet. Delicious. Muse is delicious. Meat? Is it bear? Delicious. Bear. Yeah. Without like bear, nothing. Wonky price action here. Deer. Delicious muse meat? No, that makes no sense. Okay, I'm just gonna choose random because I don't know. Animal homophones. Oh, bear, deer. Oh, red delicious, red meat, red tape. Bum, 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 bum. Prices are very, very sick right now. Monkey PA. Yeah, 8 minutes left, and I will probably not take anything here. At the 10, no need to force anything. No setups are allowed. Da, 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 da. 'Hold me, I give up. Time is on the side. Seven more minutes left. Till we get anything. Six more minutes left. About 5.5 actually. 4 minute, it looks like we have a pretty big, yeah, expansive move. You could, in theory, take this 15-minute setup right now that's occurring. So just based off of how this 15-minute closure here, what can we anticipate for us to take out this high or that low? And just looking at that, we can anticipate for us to take out the high, right? You want to go into the lower time frames to find us any supporting FEGs. On the 4 minute here, if we can create an FEG, we can take an entry like a coffee, stop down here, and target the high. It's a 0.92, but all really just depends on how this 15 minutes gonna close here. And if we even get an entry back, is all right, 2 minutes left. See what's happening here on ES. We're going expanding higher, YM as well. Dixie seems to be disrespecting its daily FEG as of right now. We are continuing lower there. We do about having a minute and 20 something left on the Dixie 4-hour candle, and I would anticipate for Dixie to run out that 4-hour candle low, and instead of running the high. So if we can see lower prices on the dollar, we should be able to see higher prices on the indices. About 1 minute left. Bum, 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 bum. One minute left to the 10 o'clock open. No news at 10 o'clock. So So there's a 10 o'clock. The idea is if we can get a retracement back into that 4-minute FEG on the 15-minute and target this high. But if we take out this high, then I wouldn't take the trade. Here. And it looks like we're about to take that high. And we just took the high. So no trade there. Let me mark out the 10 o'clock open actually. And so we just took up pre-market highs there. Pre-market highs has been taken. Let's look on the higher time frames here to see what we took out previous hourly high. We are now retracing back inside a hourly FEG. If we can get a closure above it, then we might take out on the hourly time frame. We could take out London highs, but it all depends on how we trade there. Yeah, it's just took out previous day high. So like I said before, indices are out of pretty wonky right now. NQ took out previous day low while ES didn't, and ES just took out previous day high while NQ didn't. See what type of reaction we get here, but like I said, only trading lower time frame models. We just took out previous hourly 4-hour high and hourly high as well. And now we're retraced back into an hourly FEG. Yeah. So we took up pre-market highs. Let's see what we do from there. Ooh, I know this song. This song used to be in the fucking League of Legends montages. What did it enter off of on FVG? God, works. Yeah, enter off of this thing. Unless we can get a displacement above, yeah, closure above this hourly high here. So we could see this here, this hourly structure here as a market structure shift. Right there. You can see that as, you can view that as a market structure shift on the higher time frame. What is it? So us taking that pre-market high is the is basically that market structure shift, and if we can close above this FEG here, then we can continue higher, attacking London highs. Five to nine. I think he entered at the 930, so I'm assuming he was targeting here. Oh no, he was targeting here. there anybody? There's no one in chat. I'll just look at it myself. I was gonna ask for some critiques, but my friend did say that to make this picture a little bit bigger. But I can rephrase this to come join our be a part, embark on your I like that. I don't want it to be just a, yeah, I think this is so we have a minute left of this 15-minute candle, and we're still showing signs of respect to this hourly FEG, but we're on the 15-minute time frame right now, so we have to see a hourly closure. I just want to use ChatGPT, that's it. Alright, there you go. Embark on your person. Begin your journey. Embark on your journey. Does that make sense? Embark your journey. Embark on your personal growth. Begin your journey. Oh. Embark on your journey. Okay. So personal growth and become part of community. Embark on your journey of personal growth and become a part of our community. Embark on your journey of personal growth and become part of our community. So I finally looking like still got a good amount of time left. Opportunities present itself all the time, so you'll be chilling. Contact details. Contact information, contact details. I want to keep this like a very vagabond-esque. A vagabond basically is a wanderer. A hobo. That is not my dokuro. What the heck? Hi. Horosh. I should have the name of my business somewhere. I want to incorporate vagabond basket to Doka. I don't even know if I spell it right. Doka. personal mastery through the ancestral wisdom of the samurai, Miyamoto Musashi. No, 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 no. Let me see. ES, I believe ES just retraced back into a 4-hour FEG here. Not much displacement on the however. Kodo. Like what DKDO do Kodo. This better not be copyrighted music. It is non-copyrighted music, YouTube. I think this is fine for now. Keep the black and white theme. Market YouTube on Instagram. How can I do that? The people that are on my following, they don't have the same common interest. But is it wrong of me to try to attempt? Said no displacement, no trade. So we can anticipate for this low to be ran on a 30-minute time frame, but we can anticipate for the 30-minute low to be ran here, but on the lower time frames we don't have any supporting ideas of taking that low. No FEGs, no displacement, no trade. We must stay disciplined to both sides here. Maybe on the hourly time frame, maybe after 30 minutes, there will be, you know, PD arrays that will support us. But as of right now, there's nothing, because we are showing signs of respect to this hourly FEG. Oh shoot, homeboy, how's his CFTC just just took a trade. Shall we watch it together? Let's watch it together.
So, I've been under the weather of sorts. Not sure how to explain it other than I believe it has something to do with blood sugar. I've had some issues with my vision and dizziness, and just all in all not doing well. But I'm working on it. So, looking at the NASDAQ here, I like the idea of the NASDAQ trading down for a little while. That buy side looks safe. That sell side imbalance I'm noting here, I want to see it stay below the midpoint, and I'm willing to take a short in here and aim for the low formed just after 8 o'clock in the morning. So I see several things in here. Inversion fair value gap that could happen. This is the low. Eastern time. This black and this black. Alright, so that's the initial draw. So I'm expecting it to go there, but I'd like to see it go lower. I like 760 as a intermediate term swing, so we're going to sell short here. I'll put the stop loss right there at the high. I don't think that consequent encouragement is going to be a factor for this.
What's the time frame of this trade here? Okay, 827, right? How does he know that it's not gonna? Like what? How does this guy only know? It's on the 30-minute time frame. Might be y'all. How does he know this highs are gonna get ran? Freaking ICT. Very interesting. So here I would have gone short here actually. That's where I would have gone short. At 8:30 or 8:45 per se, sorry. So 8:45 I've gone short there. I don't know.
Okay, and I'll get that off of there. Now I'm watching that last up close candle, the big bold green one. My eyes looking right at the close of that candlestick, and that's a rejection block. If it can stab one more time up into that, I'll add just to prove the method and concept. So we're looking for that decline around 7:50 a.m. New York time. is a volume imbalance. I'm going to add into that right there. And it might not get up into that rejection block, but if it does, I'll add it. Me annotate this volume imbalance for you. Now, volume imbalance is the weakest in terms of the flexibility on all my PD arrays, so I'm completely comfortable with letting price go through them and then coming back to them as a either target, means of managing a stop loss. So these things always gotta get it where I want it. It's never where I want it. I want it to thicken up here. Come on. There you go. Alright. So it could bounce off this volume imbalance. And if it can sweep to that last up close candle, the biggest green one, before it turned or rolled over here, I'll take that as an additional short entry. And the stop loss is safe, so just want to draw special attention to that. So I'm not fearful of adding. So that's the consequent correction of the wick, 3 candles back. And there is what looks like the rejection block right there. Yep, I got it right there. So I'd like to see it turn right there on a dime. If it's truly in fact a rejection block, it should in fact drop and fall away from here and start gravitating towards that low I was looking for. So far, so good. Now this becomes a premium array, where if it trades away from it on the downside, if it comes back up into it, it should act as resistance. Because now the narrative's in play, and there you go, look at that. It's almost like voodoo. Alright, so I'm looking at the buy side value, sell side efficiency that we're trading inside of, just to the left of where price is trading now. And don't lose sight of that low down here, because that's where my focus is. I'm not so much concerned about it ripping and reversing higher, but I like the idea of taking some other risk away here. And I want to see that buy side imbalance, sell side inefficiency morph into a, just be a little facetious here. No ICT video was complete without it. And that buy side imbalance, sell side inefficiency, I want to see that act as a inversion fair value gap. So inversion fair value gaps are typically shown in my educational examples, the teachings. I usually annotate them as an orange hued rectangle. So while this here, see that candle's high, that candle's low, that candle's high, that candle's low. The folks that think these are liquidity voids, that they can just trade back down into them and go back up because they don't know what's going on, they'll look at that as the reason to go long, and they'll lose their shirt here. So what I'm showing you is that I'm viewing that as an inversion fair value gap. And Chris Laurie doesn't teach that, by the way. He might start doing it now because mine works, a lot better. But the inversion fair value gap here, I want to annotate that and put gradients inside of them. Okay, so what we're going to do is we're going to break them up into the upper quadrant, consequent encroachment, which is midpoint, and then there is the lower quadrant, and then obviously the below it. So let me show you that with the fib here. So that's normal, that's consequent encroachment, and here's the fib settings. You want to screenshot that. And now there's the quadrants inside of that. This is not quarters theory, and quarters theory is a joke, so stop asking me in the comment section. It's all a farce, okay? It's another gimmick. Watch and see what the difference is here. Okay, this is not quarters theory. You'll never see anyone teaching this outside of me and my lectures, and anything after I've taught it in mentorship, then you see all these little scribes and copycats. Let me copy this little volume imbalance in here. I think we're going to shoot up into that and hit the upper quadrant. At most, I don't want to see it close above the upper quadrant. I'm picking these up. Oh, there's the upper quadrant. Alright, so that should be enough. Now, from a narrative standpoint, the algorithm should start to spool lower, and there's a little short-term low right at 820 or so. That's also inside of another buy-side imbalance, outside an efficiency. I don't expect that to act as a inversion fair value gap. I'd like to see it melt right through that. So what I'm watching here is, does it want to trade above the upper quadrant of that inversion fair value gap? Here's the low I was referring to. This is a minor sell side liquidity, so it's just another factor to look for and study. Is price gravitating to this level? If I was extremely insecure as a new developing student, I would look to take a partial under this low, but I've been around the block a few times, so I'm going to hold for the target down here because I have a longer term target I'm trying to reach for. Okay, so that's the next gravitational draw on price. And if the algorithm does exist and it does want to go lower, that should just go right down there and then accelerate through it, not just poke its toe in the water and then go back up into the inversion fair value gap. I don't want to see that. It's already done the work inside the inversion fair value gap. So I want to see some big down close candles, expansion lower. That'll confirm to me that we will absolutely have no problem reaching the 926 level. And a little bit lower, I'll put a limit order below that. Right now I'm focusing on what we're seeing here, and that's beautiful. That's exactly what we want to see. Now spread its wings a little bit more. I like that now. So I probably just got lucky. I know you ought to see the comment section. These guys love these little comments. And just for the sake of answering the folks that constantly leave little comments, I'm going to stop here. Okay, that covers costs. And the reason why you don't see comments, even though it looks like the comment section is open, it is open. It's just for me to read. Anyone that says, why isn't there any comments, I ban those individuals, so I'll never see your comments again. And usually they're from people that aren't really subscribed to the channel, so I could care less if I ever see your comment again. Alright, so we have a limit order that I want to move just a little bit lower. So we have 15 scheduled to come off under that low. So far, everything just looks absolutely gorgeous. Market's open, no market replay.
I don't need validation. There's no need for me to
I had a person ask me, can you move that thing? What are you hiding? There's nothing over here. That's just the time thing. Okay, it's always New York. And you can see the countdown to close on the price action for the candlestick. So you can't do those things on market replay. Alright, so we're focusing on that low right there. Now you see how we're going up into the most recent down close candle. I want to see it stay inside of that range. I don't want to see it go above the open of it. So I want to focus primarily on heaviness. I want to see the price have no strength overcoming the previous candle's body. In other words, I don't even want to see it return to its wick. To me, that would indicate that this is absolutely going to roll over and smash through that low. And it should have no problem reaching low enough to get that limit order. Small little fair value gap it's straight up into. You see that here. So now with that, I absolutely want to see it just fall out of bed and just cream into that low. Or for the folks that aren't English majors, I want to see it drop down fast, aggressive from where it is right now. Targeting that low that I have as an initial draw on liquidity post 8:30 a.m. Eastern time. As an audio reminder, you're seeing obviously in my videos, there's a few scammers on Instagram. One has a large following, pretending to be me. I'm not on Instagram, and I'm not doing a paid mentorship. So stop believing these jokers. And if you're giving them money, you're an idiot. All right, now think about what I was walking you through as we were trading up at the highs. Okay, see that? That is actually turtle soup. And I will be teaching that in an upcoming lecture. It ain't the guy on Twitter teaching you the secrets of turtle soup. And it's not Linda Rasch's version either. Everybody out here scrambling, make a name for themselves on borrowed hand-me-down logic from good old ICT. So this is usually where we classically flirt with it. So I'm gonna add my typical facetious little remark. Alright, this is prepare yourself for another random act of precision. There you go. And now we just sit here and wait. It's inevitable, right? This guy gets lucky all the time. It should lead this candle or the next for sure.
This
looks heavy. And look at this. Look at this guy go. Alright, so now I'm going to show you what I'm really aiming for. Now, I might not get it, but now because I've done fairly well here, it doesn't matter if I'm right on this. I want to see it trade down to 760, and just to make sure I can get a nice exit, not to worry about
761. 76. 761. Okay, that's a very managed a lot of it there. Pam 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 pam. Dạ. Dạ ba ma. Get back into hourly FEG. 30-minute time frame. Bang bang. Bang 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 bang. So we could await another 13 minutes to see how this hourly candle closes, but I would anticipate for us to respect this 5-minute FEG, take out the hourly low. Bang, 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 bang. So I'll enter here. Stop loss. Precipitous. Yeah, YM is going higher. Like I said, I'm not gonna take this trade yet. It is. I would take this once 11 o'clock candle opens. So we have about 12 minutes left now. Bam, 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 bam. So here's the 10:30. And Q is indeed weaker here. Like I said, I'm gonna wait till the 11 o'clock open to consider anything. Bye, Matt. Bum 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 bum. Bum 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 bum. So prices respected this 5-minute FEG here to continue lower. Let's see on the 1-minute time frame if the body's respected its consequent encroachment, which we did. Respected consequent encroachment. You get this place high, lower. Just from looking at this 30-minute time frame here, we can anticipate for this candle's low to be ran after touching a 1-hour FEG. So here we retrace back into a 1-hour FEG, and then we kind of priced lower on the 30-minute time frame. And then we're looking at this 30-minute power of 3 here. We can, what can you anticipate for prices to take out? This candle's lower, this candle's high. Just looking based off of that, we can anticipate this candle's low to be ran So we would go on to the, like, 4 minute, 5 minute, whatever time frames that you want to go down to. 4 minute, on the 5 minute there is a 5 minute FEG. On the 4 minute there's a 4 minute FEG as well. And on a 3 minute, 2 and then 1, so we would have taken our entry at the 5 minute FEG, and targets would have been that 30-minute low. I'm not too sure where that 5 minute FEG is on here, but like I said, probably something like this. Stop loss probably at this high here. Target first partial is the 30-minute low, and then stops to break even, and then you have another target here, and yeah. But that would have been a good trade. It's just I don't like how we were we didn't get to 10 o'clock open, and that 5 minute looked a little bit kind of small. That is a, sorry, but that is a 50 pit stop loss. Am I willing to take that risk? Look at what the 30 minutes looking like now. Bum, ba-dum. Da-na-na-na-na-na-na-na-na. Da-na-na-na-na-na-na-na-na. 4 minutes left till the closure here. 670s. Strong step by step. CRT. What is the CRT again? Candle range theory? Is that what he meant by CRT? I don't know why now. I'm just not thinking about that. Was targeting bottom of candle range theory at first, but reverse position at it. We will fly above the sky. You'll hear us tonight. No, my To protect your soul. I don't like how this 15-minute closing here. It looks like we can anticipate for prices to take out this candle's high, and the trade that I was looking at was to take out this hourly low. So, you know, there is something I not really working on because I'm still theorizing about it, but the lower time frames will show you when the higher time frame holds narrative, but the lower time frames will show you when prices will reverse in a certain direction. So not all the time on the like on this weekly candle right here. You can just by looking at this weekly candle, it looks like you can that prices will retrace back into this FEG here. But on the lower time frames, it will show you when we will retrace back. It will show you more details, and that's basically what I'm applying here. I don't know, I can't explain it that well, but here we can anticipate for this candle's high to be taken, but on the well, you know, a while ago the candle, you know, that hourly candle was all the way down here, so we were anticipating, okay, maybe the next hourly candle is going to be open, high, low, close, and take out this candle's low, but there we didn't, and now we are creating an expansion back inside the range with 1 minute left of the hourly candle closure. Sorry, it's my fidget spinner. Ouch. See, so we take out that 15-minute high here, and let's see how we react. This 30-minute, what can we anticipate for prices to do here? What can prices do here? Take out this low or take out this high? You know, we're kind of just bouncing back and forth, so I don't want to continue to think in terms of power through right now. I want to think about what's the larger time frame right now. You know, this is really this placement back inside this range. We are buying below power, the 10 o'clock open price. Let me mark out. This is the 11. And it's only if we can create a 5-minute FEG here. I feel like the music is a little bit too loud. I'm gonna lower it a little bit. So prices looks like it might create a 5-minute FEG here. We could create a 5-minute FEG and retrace back into it, and if we can respect it, then we will probably most likely take out this high. We'll see. We still have about 2 minutes left on the 5-minute time frame for a new candle. So let's see if we create a FEG or not. You could take this trade. So if we do create a 5-minute FEG and prices does want to retrace back into that into the 5-minute, we could take a trade here, like such as this. Just looking at based off this 30-minute candle here, and have the stop loss here. But like I said, I'm just gonna like not to take that because of how, you know, back and forth we are. We went back, we went up, take pre-market's highs, went down again. We went lower, took out you know, current daily low, and then we created another daily low. So we'll see. Very, very interesting price action during the morning session here. So like I said, lower time frame models only, not anticipating much because our higher time frame objective has already been taken. So once we can get like a displacement move on the 4-hour time frame or the hourly time frame, then on the hourly time frame, then 4-hour time frame, then I will consider looking at higher time frame objectives again. But as of right now, no displacement on the 4 hours. So yeah. Bang, 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 bang. Justin Wireland took a trade at 10:30. So basically, it was a retracement back inside the 5-minute FEG. Yeah, that actually wouldn't have been a bad. What time frame is this? Oh, it's a 15-second time frame. I was like, okay, so basically took a trade up into the 5-minute FEG. Taking that. Yeah, it's not bad. Not too bad. So we did create that 5-minute FEG here on the 5-minute time frame. If we can get some sort of retracement back inside the FEG, there could be a long, you know, scenario that plays out like this to target 30-minute highs, something like that. This just is a hypothetical trade though. I'm not gonna take this one. I would have liked not to. I want to see us respect this 4 hour or 5 minute FEG first, and then see. But like I said, hypothetical trade. $30-minute time frame, targeting that 30-minute high. See if we can retrace back into it. Pip stop loss is kind of crazy, but we'll see. We're buying below the 11 o'clock open here, buying into an FEG. Are we disrespecting bearish PD arrays? We close above the consequent encroachment. Never got a really closure above the 5-minute CB here though, so. Strive for constant growth.
What a conundrum we're in, right? So ES did retrace back into its 5-minute respective 5-minute FEG, while NQ didn't. So ES retraced back, NQ didn't. Today might just be a no trade day. We'll see. Bing, bing, bing. So we did get a closure above the inversion or that SIBI now. See how we do, how we trade there. Wait, I have 14 subscribers. "14 seconds of view time is crazy." These view times are extremely low. I have to make my shorter videos. Whatever. Hey, okay. Consolidation. I don't know if that's a word, but if there's no setup by 11, I'm gonna call it a day. That's enough chart work. After I get some water to drink, I can do some. I'm gonna go do like a favor for myself. I'm gonna do a recap over my own trading strategy, just to make sure instill it into my brain. And yeah, let's do that for the live stream today. right. Oh shoot, we just retraced back into the 5-minute FEG. I forgot. I am streaming right now, so I have to streamer personality. I have to can't I can't be acting weird. Okay. He just came back inside a 5-minute FEG. This is probably a trade that I wouldn't have taken. I didn't take this trade just because of how I didn't trade this retracement back inside this FPG here just because how the 30 minutes candle is looking and no closures, you know. I am liking this though. 1 minute left.
Okay.
This is wait, what? Oh shoot. Alright, so on the 5-minute PO3 here, like we can anticipate for this high to get tapped. I'm gonna fly 5. We can anticipate that high to be ran. If we take out the 5-minute high, then I'm not gonna take the entry. But just based off of that, so we are buying below 11 o'clock power of 3. I'm targeting the 5-minute high here. So 5-minute high, I'm taking off two there, and move stop loss to break even. Stops will be moved to break even. So this is basically kind of based off of the 5-minute power of 3. If we get a retracement back inside this 5-minute FPG, then we get a retracement, you know. I was willing to take the trade off of the 1-minute FPG, and if we get stopped out, we get stopped out. So if we get stopped out, we get stopped out here. Alright, there's a stop. That was a nice 268. 5 contracts, let's see. Took a trade based off of 1 minute. It stops right here. Okay, that was a 195 okay. Yeah, we should have gotten a reaction already, but just looking at how this for fair consolidation, so I just trade. Yeah, I think I would do that again, to be honest. I mean, I'm buying below the 11 o'clock open, 10:30 or 11:30 o'clock open, and 10 a.m. open. Targeting the 5-minute highs and remove stop loss to break even, and then not bad. Yeah, that was just a stop loss then. We'll see. Like I said, I give my trade ideas two attempts, so I can go back in once more if this 5-minute allows it. So I'm gonna wait till the 5-minute closure here. And the second trade idea will probably be only 3 contracts, only 3 cons. So entry is the same, target's the same here. 28, 26. Two, one, have it. There you go. Try it once more. And like I said, if once we take out this high, then I would consider selling two contracts and then move stops to break even. Take off one. I mean, this is only 3. So let's see here. Buying below again, once again buying below the 11 o'clock open. 11:30 as well, targeting the 5-minute highs. I went into the second trade with lower cut size. Running low. There's a trade idea. Now, you ready? Go to basketball. Go to the gym. Some shorts on. On the higher time frame here. sub one contract at this high, and then another one at the 30-minute high here. So this is 15-minute high. All right, so now stops are moved to break even. I'm not gonna be, so like I said, I moved stop loss to break even there now, so it's not just a winning trade or whatever trade you want to do it as. It could stop me out again, or like stop my come back down to my break even, but like I said, that's how I trade. That was based off of the 5-minute power of 3, so we'll see. And we are in consolidation of markets right now, so can I mitigate some of my losses? Of course, sure can. Like I said, I'm targeting this 15-minute high, and then this 30-minute high right here, just based off of how they're looking. Here. I'll probably close the streams off whenever this trade is over, but like I said, it can stop me out right here, or anything can happen. But like I said, I already took my partial, and I traded with less size on this one, so we'll see. Get it? Get it? Looks like it might stop me out at break even here. Who knows? We'll see. Here's the open of that candle, that downward closed candle. Let's see if it acts like a order block or not, but will I see prices take out this high again? Possibly. I'll target another 5-minute high here actually. Target the 5-minute high, move that high from the 30-minute. And here. Very consolidation of markets. Very, very, very consolidative. Alright, so our second target has been hit. So now I would like to see us take out that 15-minute high. I'm not gonna win back all my losses, but just because I took lower size here, but I would mitigate some of my losses. All right, there is my break even stop out, and yeah, that's probably gonna be all for me today. Not very kind of consolidation of markets here. Like I said before, the trade I took here today was based off of the 5-minute PO3. Went on to the lower time frames, saw a 1-minute FEG here. That prices should have respected to take out that 5-minute high. We didn't respect it, got stopped out. We retraced, we closed back above it again, took a second entry, but this time instead of taking 5 contracts, I took 3, and then I targeted that 5-minute high again. Stop loss to break even after that, and then yeah, not the cleanest trade, but you know, it's a trade. Ended the day with minus 207. Initially, I believe it was at 270, 280 around there. So not too bad. Very, very very consolidated markets. And going over that day trading strategy again. So not, like I said, higher time frame is the most important aspect of day trading, or technical analysis. You have to understand what prices is doing and why it should behave in such a manner. Daily, weekly, monthly is the higher time frame. And like I said, however, whenever we take a higher time frame objective, you should only take you know, lower time frame models, such as the 15-minute, 1 hour, and maybe even 4 hour. But when you trade lower time frame models, that means you would only have lower time frame objectives. You're not shooting for the stars by shooting for, you know, previous month's high or previous month's low, yearly low, whatever. Examples of the way I trade is, you know, we tap back into a daily PD array and then we have a 4 hour, you know, respect of it, PO3, go into the lower time frames and look for any entries from on the lower time frames. And formulating an idea of whether the higher low will be taken, we go into the lower time frame we go on into the lower time frame relative to the power of 3 time frame to find supporting FGs that are in confluence with taking the higher low. So my personal PD array of choice, if you guys haven't noticed yet, is the FEG, the fair value gap. I think it's the easiest to see, and it's very objective. It's not subjective. It's not as subjective as the other PD arrays that ICT does have put out there. Here's an example of a consolidation of market. And we have you know, this 15-minute power of 3 here. We are anticipating for us to run this candle's high, go into the lower time frames to see if there's any displacement. There's displacement relative on the 5-minute time frame, you know, 15, 5-minute, they're both relative to each other. Then it's not like the 4 hour to 1 minute. These time frames are closely aligned to each other, and then we go into the 1 minute to find the entry. So 5-minute period array, 1 minute for the entry, and then targeting previous 15-minute high. Not too bad. Power of 3, ask yourself, will prices take out this candle's low or high with the next candle? We would then go into the lower time frame we would then go onto the lower time frame relative to that power of 3 time frame to find FAGs that support our objectives. So what I mean by that is, if we're looking at a 15-minute PO3 like this example here, we would go down to like a 5-minute time frame relative to that 15-minute. Not like you go from the 15-minute to the 1 second. They're not relative to each other. It's kind of, you know, the alignment is too far apart. We would the most common time frames I use are for entries are the 15 and sub 5 minute. This is because I am an intraday scalper, so I do trade intraday. I don't trade any swing trades of sort. If there is a displacement, no trade, meaning if there is supporting FEGs in the lower if there's supporting FEGs in the lower time frame, there is no supporting FEGs. Wait for candle closures. I did that. Do not take a trade after objective has been met. Give a model 2 chances. I actually followed that today, and then I went and I traded less size on my second trade just to mitigate risk, which is, you know, good on my end because I followed my discipline and my conviction. But overall today has been interesting, very consolidational. There was a trade set up here on the 30-minute time frame that we could have got, but I wasn't looking for it, and yeah, the trade took off without me, which is completely fine. I traded the 5-minute entry, or like I guess trade idea here. Tapped into a 5-minute FEG, had this 5-minute power of 3 now, targeting that 5-minute power of 3 with the 1-minute FEG. So that range would have been, that is a 12. That range is quite small, but you know, it's something. Waited till the 10:30 open as well, so we opened, tapped into it, buying below 11 o'clock open and 10:30 o'clock open, targeting that 5-minute high and terminus at that 15 and 30-minute high. Yeah, with that, I'm probably gonna call it a day. I'll catch you guys tomorrow at 8:20 a.m. CST.